Hey, it's me, Rob Ryan, and I am back with another power-packed episode of Entrepreneurial Thinkers. We dive into the elusive, almost sometimes secretive investor equity category of family offices. If you have tried to raise capital for an early stage company, or if you are an emerging fund manager, or what they would call like an emerging venture capitalist trying to raise money from investors to put into your fund for you to manage and deploy, you know that family offices are this nebulous, vague category of apparently very, very wealthy people or very successful business organizations or people have capital to deploy, but you just can't seem to find it. So if you've ever been curious about that, if you feel like you want to learn more about it, if you feel like you need to understand where to find those types of people and what those profiles of those investors are like, this is the episode you want to enjoy. So I get to sit down with my friend Robert Mowry, who is a fellow long LA believer. He's a young guy with an already prolific profile of investment involvement and investment advising here in Southern California. He works with athletes. He works with entertainment industry folks. He works with family offices. He works with traditional funds. He also is a teacher at UCLA in their extension programs around entrepreneurship, and just brings to us just a breadth and depth of experience that belies his still relatively young age. Super grateful for him. Grateful for the opportunity to have a conversation as a result of our friend, Michael Shore, who helped us meet one another. And again, if you are interested in any of these things, trying to figure out this secretive, elusive world of equity investments known as family offices, this is an episode that you're going to want to enjoy. So we hope that you enjoy it as much as we did making it for you. Hola, hello, hi, bienvenido, and welcome back or welcome to Entrepreneurial Thinkers. If you're a regular listener or if you're just joining us, this is the show where I get to have weekly conversations with some of the best and brightest entrepreneurial thinkers across all sectors and segments of society and industry today. And we try and come together in these conversations to hopefully leave this world a little bit better than we found it by the end of the time we're together. So with that in mind, super excited to be joined by Robert Mowry. Robert's an investor and a venture advocate, and through his various leadership roles, including his role as a partner at Palo Alto Ventures, a managing partner at Rec Tech, and a whole bunch of other stuff that we're going to talk about, probably some things that he's got going on that I don't even know about yet. We're going to delve into a wide range of topics that I think in some ways don't get discussed enough, and then in some ways get discussed a lot by a lot of different people, and I'm going to give Robert a chance to clarify a lot of that for us because, as I'll tell you now, before we meet him, give you a little bit of his background, he is truly an expert. And that's not a phrase I use lightly, honestly. It's a word I use very infrequently, in fact. But he invests, he advocates, and he teaches all things venture and technology investments within the UCLA Extension campus programs. And he has a particular experience with what I'll call like kind of often misunderstood or little known parts of the investment equity, private equity world, like family offices, which we're going to talk. Hopefully he'll help explain those to us. And in perfect family office context, I don't expect him to talk about the family offices that he works with at all, but he can generically talk about all other family offices to help us all learn about these. He's a keen relationship builder. In fact, that's how we met through a mutual friend at a dinner one night and just immediately connected and clicked. He's an articulate voice on technology topics such as blockchain, AI, and many things beyond. His daily work is fascinating to me because he's a bit of a Renaissance man in that he covers such a range of topics that it's not uncommon to see him on the dais speaking, maybe making a talking head appearance on a popular cable news network, or even interviewing a founder or investor online, or sitting in the back of a big room at an LA tech event, or at the front of an investor dinner in a really intimate setting. So from my following of him, he seems to be kind of everywhere all the time, which I want to find out how he does that. Maybe he has a clone or a twin brother that we haven't met yet. And as such, he's developed a really, truly, deeply trusted, great reputation here across our Southern California entrepreneurial economy. That's not surprising because he's got his roots here locally, right? He's a local OC boy done good. He studied at UC San Diego and UCLA. And as I've said before, his professional experiences have had him serve kind of as a face of LA in a number of different firms over the course of his career. Again, as I mentioned, Palo Alto Ventures, Rec Tech, the Northern Atlanta offices, and early stage LA. And I invited him today, honestly, to sit down and help us demystify the world of family offices, but also talk very broadly about our LA entrepreneurial economy, about venture, and about, frankly, just his interests and the vast opportunities and challenges that we all face on a daily basis. So, Robert, buddy, it's great to have you here. Thanks for sharing this conversation with us today.
Always happy to uplift another Rob. Like you mentioned, that dinner was incredible. And likewise, I'll throw many of the things that you threw at me back at you. And LA, we do so much very well, but there is still a lot more that we can get better at doing.
Always 100% true. And we ought to, since we've mentioned it both now in our own ways, we ought to shout out our buddy Michael Shore, who was the host of that incredible, very intimate dinner of founders and investors and friends in Beverly Hills back a handful of months ago. Michael, I know, is listening because he's an avid listener of every episode and a huge advocate and a proud alum of the show himself, which you are now joining that amazing group of, as we call you all, not just former guests, we call you alumnus, because we truly do believe that the opportunities for us to start to come together and lean and grow from each other. So there's a lot to talk about. We're going to try and get to it as orderly as we can, but I want to start, and again, I respect the privacy boundaries of things that you can and can't talk about. That's often the case when we're talking to investors and folks who represent other people's money and interest. I would just ask that you try and entertain us and guide us and inform us as much as you can about kind of these areas that we want to dive into. And the first one, which has been honestly a point of curiosity for me for decades, is this idea of family offices, right? So you do some work in family offices. We just had Kiana Patterson on, who's a superstar here in LA in her own right. And she has done a lot of work in family offices, although we didn't talk about that because I wanted to save this for you. So help us understand, what is a family office first and foremost, and then kind of how does it play into the investment economy?
A family office is what I term to be a literal office very often, but nowadays increasingly more remote, of people that are investing out of a particular pool. Typically, that pool is owned by all members of the family and in some way divvied up. Like we all know about the Johnson & Johnson brand that I use their shampoo on my 4-year-old every night, and we use throughout our day. And they have a family office that they'll dole out money for further investments outside of Johnson & Johnson. And like those are big family offices, but there's also ones that are relatively small. The number that I saw that starts off at which someone might consider a family office is when they have 20 million in liquid assets. But PitchBook and Crunchbase and different databases will use different numbers. The number that I've seen kind of averaging out is right about 50, where people know what they don't know, which is they want to make investments into a variety of things and don't have the specialization to do so. So they hire outside help. We're unique in LA in that we actually have more family offices, or at least people that would qualify to be under that umbrella, than San Francisco. But we're about half of what New York is. So the latest numbers that I saw from PitchBook is about 5,000 to 7,000 in SF, about 10,000 here, and about 15 to 20 if you include Greenwich, Connecticut, and all that. And those are people that most of the time will use a multifamily office firm. So someone that's helping them, but is not captive to, pay a salary and that sort of thing. So it's ever changing, but roughly in that vein.
So if I'm hearing you correctly, and I think I kind of had garnered this over the last couple of years on my own, is there's like a cottage industry that has been born around these people, right? So you like these, there are service providers. Are there expert firms who are helping these people figure out how to even set these family organizations up?
Yeah, and a lot of good ones. What I learned from going to a lot of these family office conventions is that some 80% of people are just doing it like on their own or shooting from the hip, and they don't have a formalized structure.
That was one of the things I was going to ask, right? Is are a lot of these just kind of fancy fronts, structural fronts for like hobbyish angel investments?
I think that's a good way to put it. For some, certainly there are. There are people that fashion themselves to be family office executives. Most often they're from finance or law, and they can put entities together. They know how to diligence things if they've been in finance. So they have that background to help someone that's not coming in with a smaller check, like has a few more zeros to add on top of that, and then they don't want to blow it. so they can
Yeah.
help them do that more at scale.
Do you find, like, generally speaking, they are families with inherited wealth? Are they families with like operating business empires that throw off so much cash that they just decide, hey, we should literally build kind of a business around our ability to invest? Like, is it a little bit of both, or is there a dominant trend amongst the universe of family offices?
That's a great point. On the first question, it's region specific. So if you're in LA, most of the time it's real estate money that people are trying to put into different things so that they don't have correlated assets that are going to get wiped out if we have another financial crisis or property values
Okay.
go down. If you're in SF, it's a lot of just tech in general. If you're in San Diego, it's biotech. In New York, it's kind of everything. And on the real drivers of it, if someone has made money, let's say in real estate, they feel comfortable and they like doing direct investments into prop tech. But more and more, and especially in 2021, you saw people investing into emerging managers or people that had a specialization around like whatever their focus is. So one of my buddies that has been in the AI space for a decade, like his phone has been ringing off the hook for people that know that they can't make heads or tails of AI technology and are like, can you help me with this, please?
Right, but they know they're supposed to be in it.
Have to be for the dinner parties.
Interesting. And you teased it out a little bit there. So some of the motivations and interests are really aligned with their businesses. Like, so I'm expert at this stuff, but I want to diversify. Some of it are I'm a good business person, or we were successful at what we did, but I'm a curious person, or my family has other interests, and so there are emerging things I want to get involved in. And then some of it is just the country club set of like, well, this is what you're supposed to do, so I guess we'll have one too, and then we can brag about it while we golf, and it's not necessarily super meaningful.
Yeah, and there's always a keeping up with the Joneses, but what a lot of
Yeah.
family office executives do, I don't put myself in this category, but they help with things that you might not consider. So think about communication between family members. Like, is there a codified plan at which a patriarch passes off to his son or daughter? How do you do communication? Do you have an investment committee? Will the uncomfortable question about inheritance, like these are all considerations that people think about a lot of times until it's too late.
Yeah.
And only through the real nudging of the kids, a lot of times, or lawyers or accountants, do people that have had so much success just betting on themselves again and again are able to loosen the reins a little bit.
Yeah, that was the emergence of it, which I witnessed in Latin America, for say 2015 to 2020, and then now more so even post pandemic, was really along those lines, right? Was this idea that you had these follow on generations, right? The kids, the grandkids, et cetera, that were coming along and saying to the founding patriarch, and it was almost always in Latin America a patriarch that founded it, right? That hey, like, okay, we're tired of just working in the business or working for the company, or I left the country and went to Los Angeles to become an architect or something totally different. But now you're 80 and I'm in my 40s and I have kids, and so I've got 9 brothers and sisters. Maybe we should put a structure in place, and then that structure kind of gave birth to the family office. And then at some point, it seems like in the last 5 years, for maybe post pandemic, right, is then that has now seen a preponderance of family offices making active investments in venture and private equity across Latin America. Whereas when I landed in Latin America in 2016, 2015, like that was nobody would have known what that was, right? The super elite wealthy people had foundations, or as they would say, fundaciones, right? But there was none of this. And now it seems that this is as common there as it is seemingly here, based on those numbers that you shared. So that's fascinating to me. I'm curious. Help us understand, right? It's a really busy landscape for alternative ways for entrepreneurs to raise capital nowadays, right? And it's dominated in the world that you and I play in and most familiar with by venture capital and private equity. But in that landscape, maybe from an entrepreneur's lens standpoint, like where do family offices fit in that?
They're great to have on the cap table, I can tell you that. And they make the bread and butter of fund ones that are trying to launch their emerging manager fund of some stripe.
Okay.
And they provide, pretty ready capital towards new things that institutional investors won't touch. And so in talking to people, if you're going to do a new fund, or if you're an entrepreneur that's trying to build a business around a particular thesis, you can target people that are executives in that space, or you can target family offices they like to term themselves super angels a lot of times.
Okay.
And that's kind of where like economies of scale hit, where if you get a few that really have deep buy-in on what you're doing, then they can fill up your round.
Interesting. And you raise a great point, which I kind of unintentionally skipped over, right? So I was asking you the question through the entrepreneur's lens perspective, but you just reminded us all that from a limited partner standpoint, which again, for those folks that are new to the podcast or don't listen often, a limited partner is the institutional or kind of bundled money people that invest in other funds, right? So you might meet your venture capitalist and they are managing and deploying the capital that were put into them by these people called limited partners. And so the family offices, according to what you just said, are making up a increasingly larger segment of the LP, the limited partner community, to fund the smaller, new emerging funds that are coming along.
Exactly right. I mean, in this environment where the risk-free rate is so high, it's especially true. We think about 2021 as being a really hot time, but now the people that are investing into fund managers, like they know they want aggressively double-digit returns on their money. And historically, a good way to do that is through emerging managers that have relatively small funds and get into some pretty good deals at some low valuations. The other way, it has recently been through search funds. So like individual entrepreneurs that would use SBA financing to buy an existing business and then would exit that. So on the fringes of the finance world are these outliers where you're seeing people that are able to return 15%, 20% a year fairly systematically, either because they get in super early on deals or because they have bank debt that they get on really favorable terms guaranteed by the government.
Huh. That's fascinating. Thank you for that. I put it off long enough. I want to better understand you. Like you are, as I said in your bio, you're an insanely active person from a professional standpoint, and you have a 4-year-old and a family. I mean, there's like a whole other layer there, right? Which I'm happy to talk about as a dad who was a single dad for a long part of my career, and now a grandfather, which is the easy job. This is the super easy part, but just on the professional side, right? Talk to me about how you apportion your time, like how you and not just your time maybe, but also your energy, right? Because you work in a variety of different capacities, and you can feel free to please explain kind of your portfolio of work and kind of what you do and who you do it for. But you work, as I understand it, across a portfolio of companies, firms, different interests, right? That you're providing different value for. But then you're also teaching part-time at UCLA or have, pretty consistently over the years. Dude, how do you do it all? Did you cut a deal with the maker that you have like 9 days a week or something, or 36 hours a day? Like, how do you manage to do this?
All three things that I do all sort of float together as I see it. So one, lead a fund investing into mostly UCLA and then Berkeley that gets people that are typically in their graduate year or final year of graduate study, and gives them a check to build out what they want to build. Most VCs don't like investing in students because they don't feel like they're all in. But I see a lot of value there, especially if they're coupled with resources like Skydeck for UC Berkeley does a great job. UCLA has a lot of resources. So I feel like there's outsized opportunities there. And the most of my time teaching is really, one, to stay on top of the technology, but two, to find the most promising people through the engineering school, through Unix, through the law school, medical school that are doing cool things, and they're ready to rock with some interesting technologies. Two, and the fund's mostly B2B SaaS, so I can identify who all their clients are likely to be, and we can just scrape them on LinkedIn. And then it's a relatively low risk way to build whatever they're trying to suit a lot of times, which is great to invest in. The last thing I'll say on the first one is that Vinod Khosla says that 70% of VCs are actually more harmful than helpful, and the best check is no involvement check at all. And I believe that in the sense that I'm a big proponent of, you get banking relationships, you get the first three customers for a client, and then you pass them off to who could help them get to where they need to go. As in terms of being like a larger firm here in VC, like M13 or any of the ones that
Sure.
take it up to North Silicon Valley area. But micromanaging or interjecting insights, I'm not a big believer in that. I think if a vision is there and someone has the background, then they're empowered to take it where they need to take it, and they can exit it early and whatever they want to do. On the second side, I help a family office in New York, but for a long time we're in LA, that was a feature film actor. And I also help some athletes that are looking at venture investments just to kind of diligence them. And that's an interesting ecosystem for the reason that you mentioned. It's so opaque to people. But at the end of the day, being able to just diligence investments, to like look at, here's what Yale's doing with the Yale model, like here's capital appreciation versus preservation, pretty straightforward. And it's all about just meeting interesting people that are trying to leave an impact, give money to good causes. And I love doing that. And the last thing is that I went through an emerging manager program, because the number one question that I got from these family offices is, can you help my son or daughter run a multifamily office fund? And being able to like
Oh,
lead when I step to the side and enjoy my life. So that education, along with Michael Shore and so many people that I enormously respect, provided a way that you could help get funds institutional ready, to be able to show the way to like, how do you invest in this on behalf of your family or others, and get people really polished and ready to go. So those all tie in together in the sense that it's the same people investing across the board, and there's the pain points that extend across all these landscapes.
that's fascinating. What a unique. First of all, a couple of thoughts as I listen. One, like super smart, professor as pipeline management, right? Like the top of, for those that are listening, they won't see me going like making a funnel with my hands. For those that watch us on YouTube, will see that infamous sales image, right? So teaching as the top of the funnel tool, I love that, but also giving back. So it's not just like purely selfish and transactional. I'm sure you're making a huge impact on those kids, on those young people at that point as you're meeting them. Also, then my second reaction, like I'm 100% certain, based on the way you describe where you meet the opportunities that you invest in or that you position capital for, that you and Vinod Khosla are at completely different places in the venture scale, right? And so to him, yeah, I'm pretty sure he's not having to nurture and help anybody find their first three customers anymore, right? Because by the time they get to him, they're doing $100 million a year in revenue. But to you, I would side with you, which is absolutely, those early checks, um, being involved, being deeply involved is helpful, not harmful, right? At that particular moment of, because it's as much, it sounds like, based on what you say and my own experiences, right? It sounds like as much mentorship, and hands-on mentorship and relationship development, opening up doors, access to certain opportunities that those younger entrepreneurs might not have ever been able to create on their own, or would have taken them so long that it would have been counterintuitive to the investment value. But so that makes total sense. Thank you for that. So in this kind of portfolio approach, which is my daughter's language, millennial speak bleeding through here, right? In this portfolio approach to your career, is there a, I'm going to sound like an old boomer here, is there like a primary day job? Is it Rect Ventures, or is it the family off? Like, tell me more about kind of, this is, in my LinkedIn profile, this is this.
Yeah, I'd say the number one would probably be the family office, just
Okay.
because there's a lot that goes into it. And there's also communication, looking over things. I'm a big fan of Cal Newport, and I try to block out time. I'm not a good context switcher. So I'll do like individual days to really go deep on something. So all hours in, being of use to people that are looking in deals that are coming in, have a million questions, thinking about things for a second pair of eyes. That probably comprises most of my time, and it works out because I enjoy that the most.
No, that's fascinating. I'm going to go back and pull on something that you mentioned, just because it's not the question I was going to ask, but it's a version of it, because I'm just now naturally curious as a person here in Los Angeles, but also as a guy who a million years ago in my life was also surrounded by a bunch of young up and coming athletes, and then they eventually became some stellar long career professional athletes. And I think I'm curious, but I'm also 100% sure our audience is curious. Let's talk a little bit about that. And again, we're not naming names, we're not divulging any confidences here, but two categories, right? So a prominent film star, right, a Hollywood person, as they would say, and then a cadre of professional athletes. What are the things those folks are interested in? Is it mostly driven by the ego and by the keeping up with the Joneses, or is there a level of maturity and sophistication that you're seeing coming into those profiles where they are more interested in getting into the kind of hands-on helping entrepreneurs grow, or they are more interested in the broader entrepreneurial economy, say just here in our example in Los Angeles?
Well, I think at the end of the day, it's just the same as the family offices, where they know what they know, or they think that they know what they know. But I'll break it down into two buckets. So I did a panel earlier in the year on NIL, so name, image, and likeness facing college sports. And we're getting increasing numbers of people that are doing quite well really early in e-gaming and a variety of sports. For them, they appreciate the virality of how a brand can explode and be really popular. What's interesting is a lot of athletes or influencers, they point to others. They'd say, like, I want a deal like Kylie Jenner, or I like how this
Okay.
influencer materialized this into, making Mint Mobile, or
Right.
The Rock got into alcohol. So they compare themselves to their peers.
Sure.
So on the younger side, so people that are below 20, they're much more like, how can I leverage this influence and make it into something that can sustain me? And
Okay.
then that differs from someone that has played on the Galaxy for a few years. They have capital that they want to keep going, and they want to invest it into like soccer related stuff.
Right.
So I think it just varies on hunger, depending on how young you are and how
Sure.
willing to be aggressive you are, which also defaults to the younger people wanting to take a percentage of a company rather than the cash. Is able to structure something so that they can feel like they can win if they can extend their audience or face their audience towards something that would benefit them, but like they also have
That,
buy-in on as well.
that's the interesting part to me about what you're describing, right? Because maybe the younger professional slash then investor is more acutely aware of the opportunities and benefits of, like, let's call it like audience growth or their community growth or their social graph growth, right? And how that'll serve their brand, right? And so now they're looking at, like, let's invest in kind of aligned or adjacent things, right? That, like, so hey, I might invest in some CPG product, this coffee company over here, but it's because I know that coffee company is going to play really well with, like, my core fans, right? And then there's synergy between it. Whereas maybe the more established person is, as we might hyper overgeneralize to all types of investors, right? A little bit more broadly interested in different things, a little bit more of a maturity kind of returns type of mentality, maybe a little more risk averse. That's fascinating. Do you find the same set of dynamics at play inside of Hollywood, in with people with money inside the entertainment field, or is it a different set of dynamic drivers?
It's the same thing. And what's interesting about it is, whether it's athletes or Hollywood, people are very attuned to what their core fan base is. So let's say like a professional golfer, they know the average age of someone that's going to be watching a PGA Tour telecast tilt on the older side. So if they get a brand deal for something super young, they can communicate like, this is not likely going to work. And also, like, from the movie thing, who's the ones that are going to be approaching them? Like, I loved you in XYZ, and they can see the demographics based on that. And that's really insightful.
Yeah. Let's shift a little bit, and I want you to talk a little bit more about Los Angeles. right. So you've got your fingers in a handful of different investment pools, right? You're advising different people on what to invest, whether you're directly involved or not. And in some cases, you're directly involved. So let's talk about it from an LA standpoint, right? And kind of maybe give some food for thought to the entrepreneurs that are listening, or maybe the emerging managers that are looking for LPs into their funds. And talk to us about the areas or the things that you're most actively working in or on, and kind of some of those theses as far as the investments would go.
Well, LA is just so strong in consumer that even the VC firms in the Bay are opening up offices down here to much fanfare. And so there's a real push through some organizations that I'm a part of, like Lava, that want to build out like overall investments facing tech and that sort of thing. But I'm struck by, I went to an event for people that represent athletes and actors. And one of the people that was a talent that is on television, he said, the venture community does a poor job of weaving in creatives into all parts of the fundraising process. Like we have to go through intermediaries. And I thought that was interesting. And only it seems like in the last 5 years have I've seen a real concerted effort to have celebrities or influencers like vocally be on the cap table or be advocating more so than just like, here's a brand deal and some cash, like,
right,
taking a percentage in Liverpool or doing something much more hands-on. And I think that will continue to go in that direction because all the ones that are visible that have done it have done really well.
Interesting. It's also fascinating because what you say about, it's great validation, what you say about consumer, right? So we had Geffen Skolnick from Cup of Coffee, which is obviously a very kind of fast growing CPG coffee brand here. And Geff herself, I call her the Billie Eilish of CPG and coffee here in Southern California. She has a very, very particularly strong brand in the LGBTQ community, where she is a member of and very actively involved in. And yet, even in that episode, and then I know in personal conversations she and I have had over the last couple of years, she finds it very difficult to find, to like, how do I locate those investors who are not the massive, the M13 consumer fund, right? But how do I find those super angels, as you would say, or those family offices that are interested in consumer and CPG? Because she's like, I just feel like they would get it, that they would get me, but I don't know where to find them because they don't present themselves to the market as overtly as the firm that sets itself up an office in Santa Monica and puts a sign outside and advertises that they're here. So that it's great validation to hear. We are a consumer packaged goods type of city, but yet that's interesting that some of your athlete client associates would say, but the gap between how we connect with the opportunities, or how the opportunities connect with us, still exists.
And the advice that I would give for her is the same that I give to a lot of the venture firms, where find a keyword that best resonates with something that speaks to you, or that someone would only use if they were hyper into CPG, and throw it into LinkedIn. I'm a big believer in LinkedIn to find the people that would be investing in. I think there's a few ways that the fund managers that I've seen trip themselves up. All of them have enormously successful track records investing. So like, I'd feel comfortable investing in them, but they still fall short of their fundraising goals. One, because they don't approach the right number of investors, like throw a zero onto what you approach. And two, they don't approach the right investors that have like thesis buy-in. If you're convince someone, you think you can convince them after a few meetings, but it's really going to take 9 months or more. And why not just approach someone that's already thesis aligned, and you can just itch just a little bit more to back or get excited about what you're doing. So for me, LinkedIn Navigator is the best spend that I do every month.
That's awesome. That's great to know. And it's funny, and it's hugely valuable information for anybody that's listening. In Geffen's particular case, like she talks about it in the episode, she notably had huge success in developing an early investor, like seed angel investor traction via what's now formerly Twitter, right? X, and is therefore, and now is less prominent on that platform just because that platform's shit. But right. So this is great insight, like that there's a specific universe inside of LinkedIn, inside of this navigator tool, that can create a whole nother set of relationship opportunities. That's amazing. Thank you. You listen to the show. You're a power user, super fan. We're super grateful for that. Because you do, I know you understand how I think about certain issues and certain topics, right? And one of the ones that we recurringly come back to with so many of our guests is the just abomination that the venture and private capital industry does such a poor job of distributing its capital into diverse, more wide-ranging audiences and markets, right? And so we just keep investing in guys that look like you and I, somewhere between your age and my age, right? And while that's awesome, and there's a lot of venture-ready companies in that space, we know that historically over time there are lots of venture-ready companies in every space and in every community. So one, how do you feel about that? How do you feel about the fact that we just distribute such little, 2-3% of assets into, for example, women entrepreneurs, right? And a fraction, even less than that, to entrepreneurs of color? That's one thing. I just am curious, giving you your platform, a chance to share your thoughts about it. But then what I really want you to do is help me figure out how we start to solve that, right? Like, so how can we dig into how can we be better at that? Now, here in Los Angeles or as individual firms. So how do you feel about the fact that, 98% of our capital goes to just dudes that look like us, who probably went to even better universities than us? And then what do we do to be better at that?
We do better in LA than most cities, which I'm happy about.
Thank you. We do. Kiana and I just talked about that.
We still have ways to go. And I remember I went to a conference in Santa Monica, and one of the speakers highlighted that a certain number of people, I think, they think, well, I can see a reason why, it's not 50-50 for founders, for men versus women. They might take time off or whatever. But the stat that really resonated with people was how few Hispanic founders, men and women, got any venture dollars, including ones that go to the fanciest schools. And you're seeing a lip service from a lot of firms that like to make like a big splashy announcement they're going to invest in a certain number of people. But inevitably, if you look into a lot of those firms, they also have other partners that are, non-minorities that are benefiting as well. So it's not like a true uplifting in the way that I think could be done better. And I think there are firms, or at least I've seen fund of funds, like there's one called Screen Door, that will hyper specifically focus on emerging managers that are non-traditional.
Okay.
And if when I talk to people, and as it stands right now, our portfolio has no Caucasian males. So when I talk to other people that do in fact have Caucasian males on their cap table, what the sense that I got was that they're so worried about getting fired that they're going straight down the middle.
Yep.
What looks like their boss, or when their boss, they got a recommendation from one of their fraternity brothers, and people just don't want to take a risk. But the reality is that we know from data that many minority groups, and then women for sure, are much better with capital and aren't spending it as footloose and fancy free as many of these men are. So I'm a big proponent in that. And I think really the data will show that it's not a charitable enterprise of trying to spread the money around. It's a profit-making one.
No, I love that. Thank you for that insight. I mean, this again, because you're such a super fan of the show. I fundamentally believe that's part of my opportunity and part of our mission with this platform, right? Is to tell all kinds of positive human stories, entrepreneurial stories, but in particular to make sure that I'm using our platform to amplify those stories, right? Because if the data exists, which we all agree it does, right? It's just that's just facts. The data is there that shows, as you say, women operators, women executives, like better ROI on capital, faster to profitability, better profitability rates, less turnover, less churn of staff, like all the metrics that you would want in any good CEO or founder. And then minority businesses start more businesses than non-minorities. Like the businesses last longer, like it just all, more embedded in communities, more loyal audiences, et cetera. To me, it's just like, okay, then we've just got to tell that story more. Like we've got to tell those stories louder, more proudly, more articulately, more professionally, like more polished, to get those stories out there. So then it becomes kind of more of a mainstream discussion. So thank you for adding that insight. One of the things that is fascinating to me, again, we've talked mostly about, thank you, about family offices and now just about your broader feelings about venture and equity investment, but you're also just being the younger guy that you are still, right? You are aware of all these new kind of technologies and new trends that are coming along, right? Crypto, blockchain. Now you've mentioned AI a couple of times today, of course. So talk to me about that. Help us understand. Let's just break this into a couple pieces kind of quickly, right? So help us understand crypto and alternative currencies and or that space post 2021, because 2021 was like the last 20 minutes at every bar that I was ever at in college in Tempe, Arizona, 20 minutes before the lights came on, right? Like, so 2021 was an anomaly, but these are real things. These are real either asset categories or technologies that exist and that will persist. So let's talk about crypto, kind of help me understand what you know of it or if you play in it at all. And then next, let's really talk about, because I know you have a soft spot in real understanding of blockchain.
So I'm a big believer in back-end blockchain, and I really got into the ecosystem of crypto about 2013 just because I appreciated how it could help worldwide commerce. Like, as a developer, which I was from when I got out of school, I would be working with people in Singapore and Brazil, all over. And the native currency that a lot of times they would get paid in would be crypto. And that sidestepped a lot of the failing financial structures that may have been going on in their country. And so I learned my enthusiasm from them and went deep into Litecoin, Dogecoin, like all these things that later would pop off. But at the end of the day, I like crypto if it has an interesting use case. The problem is that many are just forks of each other, like literally a copy of the exact same technical architecture. There's a lot of times no defensibility. The patent protection is minimal because it's open source technology. And really what you're buying is a community. And so it's a tough ecosystem to invest into. I've really never put money into crypto. It's just I've earned rewards for being a part of different projects or, coding or that sort of thing. So as we see 100,000 Bitcoin right now, I always remained a little bit circumspect because you look at the people that were buying at the very bottom, 10 years ago, it's a lot of Wall Street bankers and it's a lot of people that, are incentive aligned to push it continually up. And for people that might be enough, but you can, and there has been many different types of exact same projects like Bitcoin or like an Ethereum, and you can replicate it in a few days. So it's a real buy-in around a community, but some of the communities are pretty awesome.
No, I also love that origin story too, because to me, that notion that, right, you were in the developer space and, dealing with people in different currencies and, as opposed to sending something via PayPal that winds up in a traditional bank, and the traditional banks are unstable or their fee, structures are usurious almost in many countries around the world outside of ours. That to me is like okay, that's a sensible use case, right? Like that's why something like that should exist. And I'll bridge it to blockchain, kind of as you said, like more like back end infrastructural. Right. So I said to someone, Fran Oliva, who's a past guest of the prior version of our show. Fran runs a firm called Plaintext Capital and manages money for a number of different LPs. They invest in what's called like alternative asset categories and whatnot. And Fran's a wildly smart young guy, right? And when he moved to LA and we met and we went for a hike back in 2021-ish maybe. And I was like, explain it to me like I am exactly who I am. Like I'm the middle-aged white guy who doesn't have a clue what you're talking about. Like explain it to me that way. And he kind of did. And I stopped him literally, I remember like mid-hike, and I just looked at him. I was like, okay, so what you just spent 25 minutes telling me is that blockchain is essentially like middleware. It's 21st century middleware, which I'm an old software guy, an enterprise software guy from the 90s. So I understand what middleware is. Like, So what you're telling me is like it's the underlying infrastructure, or as you said, architecture, upon which lots of other cool applications that will automate and digitize and certify and secure other parts of our societies, like, can be laid upon. I'm like, okay, that's cool. Like that makes sense to me. I'm like, when you sell it as like it's going to replace banks tomorrow, I'm like, it's nonsense to me. Like, that's just like, what are you talking about? So do you feel similarly? And is that on the blockchain end, is that your perspective, or please add your own color commentary to that?
Anarchists are intrigued with Bitcoin and are ready for civilization to devolve. But I think I'm much more of your mind. Like, it's a tool. It's an interesting tool. And what I loved here in LA is when NFTs had their day, you saw a lot of artists that did really well selling NFTs. And I'm still a big believer. And I was sad to see that OpenSea lifted the mandate on the royalties from the works being given back to the artists, because I think it's a travesty in the States that we don't have what they have in France and in the UK. And, why the Picasso estate is one of the most wealthy estates, because they're giving, 3 to 5% off of an auction sale. I think that artists in this town should benefit from everything they've ever sold at an auction block. And really, as the person that collects art, one, I like that an NFT, you could see that the person that created it, you can verify that it was actually their wallet that minted it. But two, if they're an up and coming artist and they want to build their repertoire, do more shows, like, I want to continue to give them money because the works that I have are going to be worth more. So I'm a big believer long term in the verifiability of artwork, either tracked through the blockchain or through some IoT tools that have the blockchain on the back end, and it benefiting a lot of people here in LA.
Yeah. Yeah, I'm with you on all of that. I think these are incredible technologies that are being developed and then being just really poorly marketed. Right? We're just doing a terrible job of telling these weird hyped up stories, instead of, because it's sexy and because I guess it gets the most clicks, or it gets you the most hits on, Fox Business Channel, or not you, but like people in general, right? Like, and I just don't. That can't be the end game, right? That just can't be.
Well, because you lose someone like yourself when they go to that extreme, right? Like, let's ease into how this helps a little bit banking operations, or how this could make someone who is unbanked be able to, like, have less friction there.
Yeah. Yeah, 100%. I mean, right back in the day, right, I sold lots of point solutions into huge organizations that ultimately it comes down to, can you help them understand at a business level how what your technology is going to help them, as my dad used to super simplify it and say, you're either helping them understand how they can make more money or how they can save more money, fundamentally, kind of at an enterprise level, right? And to me, these technologies have those types of potentials. It's just the stories that we tell about them to ourselves and to the world is just really a waste of energy, in my humble opinion. But you talked earlier about, or my words, I said the smart move of teaching at UCLA is that it gives you access to the top of the funnel. I have a strong suspicion, knowing the good person that you are, that there are other motivations for it and other things that you pull from that. So talk to me, if you can, like, what's the thing about teaching there and teaching these young minds that just gives you the most joy?
Well, thinking or going there, I thought that the student body would be completely different than what it is. I thought it would just be a lot of coders or people that wanted to build a career around blockchain. And it could just be because it's LA, but I'd say a third are professional athletes that want to figure out how to use the technology to either invest into or to integrate into some sort of project. And many have done really incredible things with that. A third are in the creative space in some way, and they're looking at ways to finance a potential film, to do some licensing or distribution deals on the blockchain. And then third are people that are just technically savvy and just love the idea of the automation associated with, like, smart contracts and things. So I get really enthusiastic because people really don't have to be there, but they're passionate about being there. And they're doing something in almost every case with it, with that knowledge. So it's not just like an academic pursuit of, like, I'm fluent in this now and I can understand it. It's like, no, let's take this knowledge and then build something practical that benefits people either locally or elsewhere. And I love that what I'm teaching is being immediately being used in the ecosystem, which is great.
That's really cool. It's also got to be a jolt of positive energy when for both parties, right? So for them, when they know that you're showing up excited to be there and excited to share your knowledge and teach the content and whatnot, and then for you to know, as you say, that it isn't just maybe younger undergrads who are there because they have to click off a class requirement, right? And that's the only reason they're there. But these are people that are in the extension programs that are a bit more mature, a bit more adult, right? And they're choosing to carve time out of their otherwise busy lives to be there to share in the wisdom that you share. It's got to be a good jolt. That's pretty cool.
What's kind of interesting too is it's not all people that are in LA. We get some overseas students. And what's interesting is many of them received what are called airdrops. So a project might distribute their tokens to people that just use their application. And sometimes those airdrops can be quite valuable. So I had a student that received, as I did, a Uniswap airdrop back in the day. I think it was like 2 or 3 Christmases ago, worth many thousands of dollars. And they were able to sell half for Christmas presents. Wow. And for us, that's not much, but for many developing countries, like that's an enormous amount of money. And you came into the class like, I'm ready and willing to devote the rest of my life to these horizontal organizations where everyone is brought along. We all own something without a vesting schedule or needing to pay into it. Like it's much more communally minded. And that also inspired me too, that when done well, crypto can uplift a heck of a lot of people.
I love that story. Speaking of stories, right? And again, confidence is protected. Do you have a couple of examples of stories, either through your family funds, through the family offices, through your work at UCLA? Do you have 1 or 2 example company stories that you can share with us that have really stood out to you for whatever reason they might have stood out to you?
In the early days of directing capital to UCLA, I thought that it would be a lot of business students that would end up taking a check. Ended up being more medical and law students, which I was surprised to see. People that they knew they were going to start residency and they had this idea swirling around in their head where like, I would like to maybe cut 10 years off of my time practicing as a doctor, or what if I could take care of all my medical school debt just by kicking this idea or licensing out this idea. So we invested in a company, Non-Durables, that does consumer-facing non-durable medical equipment. Think gauze, Band-Aids. My 4-year-old loves character Band-Aids, so like a cat on a Band-Aid. And she'll put one on me almost every day saying like, are you hurt? So the margin, of course, is like 100x on those types of things. So there's a lot of room for profitability, and it's just getting them in front of like an influencer that's a mom, or I love any sort of medical facing plays. And then another one we just invested into, we found out during COVID, of course, the value of remote health and specifically talk therapy. And man, certainly how much we need each other and how social of a creature we are. But yeah, investing into people that are delivering their psychiatry, psychology services online is really powerful and low risk space. So I'm super enthusiastic about the digital health space, even though I'm not as qualified to be investing into it as I should be. So I have a lot of partners that help me understand.
That's awesome. I've got 2 things that come to mind. One, and I'll share it with you afterwards. It's a young woman. She's been on the show before, I think back in our prior iteration when it was Mentors Today, and runs what you would call a digital health therapy a company out of Latin America, out of Mexico, actually called Yana, fastest growing Spanish language digital therapy platform in the world. And she's more important than that. She's an incredibly sweet, kind human being. I'll send you the link to her old episode, but then also would happily make that introduction just so you could learn from her and get to know her. Whether or not she's looking for capital right now, I don't even know. But anything I can do to help her grow and succeed in life, I've always pledged to do, because she's just a sweet And the origin story her is very classically entrepreneurial. She was trying to solve her own problem, right? And then just believed that fundamentally, like if it's my problem, it might be someone else's. And sure enough, of course, it is to the tune of millions and millions of people. So there's that. And then the other one, and this won't be breaking news by the time this episode airs after his episode, but I'll tell you is we've got to make sure that you meet and or know more deeply our good friend Andy Wilson from the Alliance for SoCal Innovation, who I'm sure you know and you know of. But because what he announced on our show yesterday when he interviewed with me, which he didn't say in the letter that he published to the community on LinkedIn and to their users, is I know where he's going next. And he talked about that, and he is going to work for to build the innovation ecosystem around the Keck School of Medicine, and is very much committed to like that he wants this next, what he calls it, last chapter of his professional life to be focused very much like you just alluded to on the health sciences and the health, digital and practical real life health markets, because he just believes that it's a place for like kind of a legacy impact potential that will, last until his grandkids are partaking of these types of services 50 and 100 years from now. And so if you have interests and curiosities about those spaces and your people that you represent to, I mean, there is no better advocate for both long LA and Los Angeles' entrepreneurial economy and potential, and then just the broader world of innovation and advancement than Andy. And so I'll make sure we connect you, and I'll tell him this story. And good news, again, his episode will come out probably the week before yours does. So this is great. But that should be helpful to you. Last question before we get to our closing segment. It's something we both care about quite a bit. We use the phrase, I just used it, long LA, right? And it's akin to, if it was a stock market bet, right? We're taking a long bet. We're making a long bet. We have a very long view. I often say, as you know, I'm interested and curious about like our potential over the next 25 to 100 years. Right. And people always tease me and say, that's absurd. You're 56 years old, Rob. You're barely going to make it to the end of the 25-year end of that spectrum. Right. But that's the way I look at the world. And I think to you, I think from our interactions, you do in some ways. So talk to me about what it is about LA, in your opinion, having grown up in Southern California, down in Orange County, right? What is it about this place that is such a unique setting that creates so much opportunity and creativity that is so naturally entrepreneurial?
It has to be just how metropolitan it is. And I think there's some sort of stat like a third or more of the unicorn founders are immigrants. And just growing up with some of the most driven people that appreciate the opportunity that we have here and are really willing to take advantage of all the resources that are extended to you as an American. So yeah, I mean, I've also marveled on that with all of the filming credits that are available in Georgia and New Mexico and Canada. People that are in the creative space are trying like they, with all of their might, to film in LA, to make it work, because the creative talent here is just world class. And I think also it's important for people to recognize, no matter what the field is, they say in New York, if you can make it there, you can make it anywhere. Like for the comedians, I would say more people in the film space, acting space, just like a professional athlete, you have to be the best in your high school, then your college, and then all the way up. For many of the comedians, people that are in their group said, not only are you the funniest person, like in our school, you're the funniest person I've ever met. And then they go to like their major metropolitan city, and when you crush it there, they say like, there's one place where you need to go, and that's LA. So we get so many talented people. Talk about brain drain from, the most incredible country. So I think that has a lot to do with it. And then the resources through banking, through VCs, through people that have had that success and are willing to return it to other people that are in their immediate community, they can see and benefit from, like all those are a positive feedback loop that continue to bode well for California. So even with so many people pushing to Austin and things, like this is just a great place to live, to grow, and to have a family.
I love that. Spoken like a true Southern California. Were you born in Orange County?
I was born in San Clemente. So yeah, South OC.
Nice. Okay, so I like there you go. This is why we have the show, because occasionally I stumble into a question that I didn't anticipate. Um, that's great. Yeah, I raised my daughter in San Clemente. We went down there, and during those years when it was just she and I, raised her, and she went to San Clemente High. Before then, she left and went to Berkeley, and then has been on her sojourn ever since, and now is here in Los Feliz. And then I left and went to South America, and then came back, and here I am in Hollywood. And but yeah, so I spent the holiday weekend down in Laguna Niguel with family. So I got my dose of South OC injected, and then headed back. But that's awesome. You're 40. You said, I think right before we jumped on the show, you've got a 4-year-old girl. Um, how have you seen it evolve over the course of your lifetime? Right, our region. Obviously, you weren't an entrepreneurial VC investor when you were like 9 or 10, but how have you seen it evolve over the course of your lifetime? And then, what is it that we all know the headlines about the things we're all concerned about, right? So let's instead lean into the possibilities. Like, what is it that you're most excited about over the course of here in Southern California, entrepreneurially speaking, over the course of, say, your daughter's lifetime?
Um, well, I went to school and went to kindergarten and everything in Newport Beach, and I remember being picked up in the school bus, and there were cows where there now is Fashion Island, the area opposite Fashion Island. So
Love that.
I marvel at the development that's here, and with all that leads opportunity. So I think that I get most excited just about the quality people that continue to come into LA, and how the people that I meet increasingly, when they get here, they recognize like this is their home. During the early pandemic, people coming from SF, we've been greatly benefited from the brain drain from up there. And once they get here, they're content to stay. I like OC, San Diego, and then South Bay, LA, because as you get more and more south, the shorts become shorter. Like you get flip flops, people more relaxed. Like that's my mentality.
Right.
And the great thing about LA, as you well know, there's a sub community of LA or SoCal for everyone, I feel like. And so you find your people. But on the venture side, the firms that have adopted what has been successful in SF, but have made it uniquely LA, and have, LPs that are also actors, and then like they get so enmeshed in the ecosystem. I think BAM did a great job of this. They build out other people that experience the updraft associated with it. So the ones that don't try to be a Silicon Valley brand of VC are the ones that I think just really crush it. And that authenticity extends to whatever community you are in. And so I love seeing the little pockets of who's a VC in Pasadena versus Venice versus San Clemente versus Carlsbad. And that's, I think, the many communities becoming one is one of the strengths of SoCal.
I love that perspective. It's I say oftentimes two things. One, you alluded to it already. I say that song about New York. You can make it there, you can make it anywhere. I tell every New Yorker I've ever met that passes through LA that song just as easily could have been written about Los Angeles, right? Because then that helps them frame up that it's hard here. Like you have to hustle, you have to work, you have to differentiate yourself, you have to be extraordinary, as you say, competitively. You can't just kind of skate through here. And I say that, but then I also say the thing that people most, I believe, misunderstand about the region as a whole, but about the county, the city and the county, is it is as much a neighborhood town and a neighborhood city as Chicago, where I grew up, which is notoriously known worldwide as a neighborhood city. And I said, but people don't give us the proper understanding or credit here for that in how they understand it. And then worse is they don't consume it that way. Right, so they spend their days trying to go from Pasadena to San Clemente to Venice Beach to Malibu to downtown for lunch, dinner, breakfast, and coffee meetings. And then they're pissed off when it took them all day and they spent the whole day in the car, right? And I'm like, yeah, because you should learn how to live in a neighborhood like you would in almost any other major mature city that is 248 years old, right, in the world. So I love that. I love those perspectives, and I love how you applied that kind of overlay into the VC or investor world, right? Because the ones that are thriving are the ones that have figured out their neighborhood, right? They figured out their tribe, and then they just quadrupled down on their neighborhood and their tribe. And then guys like you and I who traverse all those bridges, we try, and many others beyond us, obviously, but we're trying to bring some of those communities together occasionally. Not all, you can't get them together 24 hours a day, but if we can get them together more often, I think it's healthier for each of the neighborhoods when they go back, because they just see the best practices and cultural best practices in these other areas, which is now I'm giving the Alliance for SoCal Innovation speech here based on my conversation with Andy yesterday. But it's awesome, buddy. It's been a pleasure. I have one last question for you, and this is like red meat that we can leave for young entrepreneurs who are listening, right? So from your experiences managing investments across so many different genres, so many different industries, give us the bullet point answer, kind of 3 key factors that entrepreneurs should focus on when trying to attract investment from firms like the firms that you represent, or from angel or investors like the ones you represent.
Most people just default to saying to approach a portfolio company that asks for a warm intro. I've always been skeptical how VCs will say, whatever you do, don't cold email us, but cold email to get sales for your business as aggressively as you can. So I honestly am just a big believer in a nicely worded email that's short, succinct, and to the point. I think I've had the most success around when I helped a founder, like, here's what my business does. You should care because XYZ. I saw that you've invested in XYZ. Like, we complement what they do. And you would be amazed at, actually, being so seasoned in enterprise sales, you would not be amazed, but
most people would be amazed.
Yeah, like how of the hundreds of emails that I get, and a lot of people get, less than 3% are tailored to me in any way, or have had any even looked at my LinkedIn. So if you can just go to the webpage and show that you've spent 30 seconds, you're going to elevate yourself head and shoulders above others. And those warm intros help, but I found that they dry up fast and it's tough to reciprocate. So unless you have a first degree connection, I would not really advise doing that. And I'm a big believer in just create a list. Who are your dream investors? Who are people that you respect that were executives that are trying to do or have done in the past what you've done, and jump on a call with them. Ask for advice, get money, ask for money, get advice. Right. And that's the way that I've seen the most tried and true. Build a community over what you're trying to do of a few dozen people. And then the cash, a lot of times, even without asking for it, when they see that you're raising around, just fall into place.
No, I love that. Right. So, right. Cold outreach, but like thoughtful, intentional, prepared, researched, right? To more specifically, even, right, cold outreach to people that are expert in what you're doing, people that understand the industry that you're doing it in, people who have long histories in the spaces that you're proposing to provide value for or disrupt, and then build relationships with those people and create community.
The last 2 things that I would say on the family office space, the first meeting when you're approaching these larger investors, leave to listen. Most people come as a fire hose, like trying to impress, trying to give the sales spiel. You're trying to build a relationship. And in the second meeting, then you can start to toot your own horn a little bit. And the second part for enterprise sales, as you know, when you're selling something into a business, someone's going to look bad, or you're going to have to position it in a way that someone's going to look bad because it's going to displace like a legacy system. For those Bitcoin and blockchain people, like saying that banking is going to end, like that's going to make everyone look bad. So those don't have much of a chance. But I would say minimizing the number of people that look bad and then trying to get some sort of buy-in with them is a pretty tried and true way that I've seen of getting an enterprise sales service get into a larger organization.
Yeah, no, it's great. Great tips. Thank you. Super practical advice for any entrepreneurs that are listening and thinking to themselves, the constant struggle. How do I get in front of investors, and what do I say when I get in front of investors? So that's super, super timeless advice it'll be valued by everybody that listens. Thanks, Robert. Thanks, other Rob. Like this is anytime we can celebrate guys named Robert, we should do a whole show about that. That'd be awesome. But no, I really appreciate it. I did, as you said, we met very serendipitously, and I did really enjoy meeting. The context of meeting surrounded by other people that you respect and trust is always comforting. And so when we did meet in that context, and then I got to know a little bit about you, and then I watched you from afar and kind of how you move and what you do, I immediately knew that you are an entrepreneurial thinker, right? You are a broad entrepreneurial thinker, not in the narrowest sense. And so I was curious, and I wanted to get you on the show, and I'm grateful that you spent some time with us today. Thank you.
Thanks for the way you elevate LA, and you're a huge resource to the community. And go long LA.
No, I love it. Thanks you. All right. So, hey, how can people find you or follow you? Where should I think we're heading to LinkedIn if I was paying attention.
I'm a big LinkedIn guy, so Robert Mowry, Mowry on LinkedIn, and excited to point you in the right direction. Happy to be of service, whether you're in LA or elsewhere.
That's awesome. Thanks, buddy. Have a great afternoon.
Thanks a lot.
Well, I hope you enjoyed that episode as much as I did recording it. As always, we thank you so much for listening and watching. Today's show was recorded here in Los Angeles and produced by the incomparable Deanna Bernal in Mexico City. We can only grow this show by you listening and sharing the show with friends. So please find, follow, subscribe, and share our audio-only show on Spotify, Apple, or via any other popular podcasting platforms, as well as find the video version of our show now available on our YouTube channel over at Entrepreneurial Thinkers. And of course, you can follow along on our various social media platforms for fun and informative clips and content at Entrepreneurial Thinkers, wherever you can find us. And if you'd like to connect with me, you can find me at I Am Rob Ryan on just about any social media platform. Gracias, thank you, and have an awesome day.